In today's video, we're going to be talking all about how you can pay off your mortgage early in 2022. Hello and welcome back to our channel and podcast. My name's Gemma and here at WS we talk about all things relating to money, mortgages and positive money mindset. So if that interests you, then be sure to subscribe to our channel and hit the thumbs up. Guys, this really helps our YouTube algorithm and means that you won't miss out on any of our videos. On this week's episode, Let's Talk Money and Mortgages, we have Ifti joining us once again. For those of you who don't know Ifti is a trained accountant and mortgage advisor who has been in the industry for over 10 years, and he is also one of the founding directors here at WIS. Welcome back, Ifti.
Hi, it's lovely to be back. How are you, Gemma?
I'm very good, thank you. I love this topic. I know we did a video, was it a year ago, just over a year ago, on a similar subject, but this is like a revised version for 2022. So let's get into it. The first point that we're going to start with today is get the best deals from your mortgage. Ifti, tell us what this means.
Okay, so I always tell clients, always try to get on the best deal. Because the idea here is to get your mortgage paid off as soon as possible. Because that should be a target for you for 2022. Obviously, if you're coming up with objectives for yourself, I think that should be one of the objectives as well. So if your mortgage is due for renewal, you just need to make sure that you get the best deal possible. When I say best deal, what I really mean is the overall best deal. Because sometimes people come and tell me, I got a rate of 1.1%, whereas the 1.2% deal may be better because you're paying sort of a lesser product fee or zero product fee on that one. So you got to look at the overall cost, right? That's the one that's most important. So if you can get your overall costs down, that means you have that ability to pay a little bit more and help you settle your mortgage much faster.
Yeah, great. Thanks, Ifti. So point number 2, we've got make use of offset facilities.
Oh, yes, that's right. So there's something called an offset account. There are offset mortgages. So basically an offset account is a mortgage which is connected to a savings account. So if you're paying, say, 1.5% interest and you have an offset account, if you have spare cash like a rainy day fund or anything of that sort which you have kept aside, you can sort of bring it to the savings account. So instead of money that's just sitting there doing nothing much, it will pay you 1.5% interest. At present, if you can get that kind of interest, it's a massive achievement because most banks pay you next to nothing as interest. So if you can connect the two, that will be helpful. So if somebody has 100,000 mortgage and they have 50,000 in savings, if they bring it to the offset account, you're paying interest on only 50,000. So that interest you earn, you can use to pay off your mortgage. So it will help you settle your mortgage faster. So I think that's a fantastic product that some people can make use of.
Definitely. Number 3, we have lower your mortgage term.
Now that's a good one because a lot of people who come to me say, look, what's the maximum term I can go for, right? Is it 30 years, 35 years? They try to stretch as much as possible. I mean, there are benefits in doing that, but the biggest disbenefit you do that is you're delaying settling your mortgage off, right? Now, this is a term I always use. Do you want to pay your mortgage when you're about to retire? Is a question I always ask my clients, right? Because yes, now you might be happy running about, but when you're in your late 60s, maybe 70, it will be very difficult sometimes because you don't know what your health is going to be like and you don't know whether you can work at that time as well, right? So better to pay off your mortgage as soon as possible. And obviously that will help you save on the interest because the longer the term it is, you pay more interest. So be very wise in that. If you're happy to pay, say, £1,000 is mortgage, pay the £1,000. Don't extend your term and pay £800 because it will get you later and you'll end up paying a lot of interest. So that's the thing that we are trying to avoid here.
Especially as you get older and, typically people see their salaries increase. We often see people, for some reason, still kind of increasing their mortgage term. And actually, that would be a really good opportunity as your mortgage increases to sort of lower your mortgage term, right?
That's a really good point, yes.
Okay, number 4, reduce your term as you go.
Yeah, that's right. I mean, this is a trick that one of my clients use, right? And since then, I've sort of recommended to a few people as well. So what this lady did was, her income used to rise, like, people get pay rises and things like that, right? So after a couple of years, when she comes for her remortgage, let's say her income's gone up by 5% for argument's sake. So she reduces her term because she's used to paying so much as mortgage and suddenly she's got additional income, right? So she says, okay, 10% of or 20% of my monthly payments are for the mortgage. So I've got a pay rise of say 10%. So therefore I can afford to reduce one more year, right? So she reduces a year as she goes, right? So if you're on a 30-year mortgage, And if you do it that way, you'll end up with a 20-year mortgage at the end, because every 2 years you keep reducing a year as you go, right? So that helps you reduce your term. Effectively, you're paying less interest, and effectively you're paying your mortgage off early. So that's a good strategy, because if you just reduce 1 year at least, you don't feel the pinch most of the time, unless the interest rates really go up. You don't feel the pinch, right? So she has been lucky so far. I think that's a good strategy, and it's worked very well for a few of my clients for sure.
Okay, number 5, cut down on unnecessary costs. I know there's a lot of us that have these, subscriptions like Netflix, and I had all of them at one point, and then I realized, hang on a sec, I don't actually watch Hulu anymore. I only really watch Netflix, and that was like £6 a month that I was paying out unnecessary. So is it things like that you're saying cut back on?
Yeah, that's right. Cut back on some of those. I think a lot of people should do this exercise periodically, maybe at least once a year. When you have some downtime, you might as well sit down and go through your expenses. I don't think it's a massive thing to look at. Just pull out your regular bank statements and see what expenses you have in that, right? And see whether there's anything you can take away, right? Like you said, there might be multiple subscriptions you're paying for a similar service, right? So you can sort of take that away. Likewise, look at things like your credit cards as well, because there might be expenses that you might want to pull out. I always tell this to my clients. There are a lot of apps out there. Either you can subscribe, most of them are not very expensive. It tracks your expenses, right? So it says how much do you pay for transport, how much do you pay for food, how much do you pay for entertainment. If you use apps like that, you can budget your expense. So say, for example, let's say you have an entertainment budget of, say, £200 a month, for argument's sake. So if you're nearing that limit, you will always see that, right? So maybe you can postpone your entertainment for next month, right? And just make sure that you're keeping within the limit. So that way you can retain your expenses. And if you can lower your expenses, obviously you can use that money paying your mortgage off, right? Because the ultimate objective is to get your mortgage settled as soon as possible.
Yeah, cutting down on unnecessary costs and budgeting, I think, together really are really important. Number 6, overpay your mortgage. I love this one.
Oh, yes. Yeah. So overpaying is always a good habit. Most banks will give you an option to settle 10% of your mortgage every year. So they will give you, without a penalty, you can pay 10%. Obviously, there is a penalty if you pay more than that. But I'm just saying, at least try and do whatever you can within that 10% limit, right? So if you have a spare £200 at the end of the month, or if you have a spare £500 at the end of the month, it might be an option to settle your mortgage, right? Because sometimes when you have money, you're a little tempted to spend it on maybe unnecessary things as well. But remember, you've got a big loan in the background, right? Most people who has a house has a mortgage, right? So if you settle a little bit more, you're reducing your term, and you're reducing your LTV, because potentially you can go for better loan to value products next time because you are lowering your mortgage. So that might be a good option. I've seen a lot of my clients do that, because we issue mortgage offers to clients via the banks. But then, 2 years down the line, when they come to us, they have practiced what we've told them, right? They've paid a little extra. So the expected balance and the actual balance are different, right? So I think, people are using this strategy quite successfully. I think it's something that most people have to use, right? It'll help you settle your mortgage faster for sure.
And just to clarify, is it 10% of the overall mortgage? So if it was 100 grand, so 10% would be 10,000.
Yeah, that's right. So it's 10% of the loan. So obviously the loan keeps reducing. So if you go today, it's based on the balance of today, right? So That's how banks usually work this out.
Cool. Number 7, short-term deals may be a better option.
Okay, so with short-term deals, this is why I say this, generally the interest rates are lower, right? So if you have a lower interest rate, say a long-term deal, let's say you're paying £100 more, but why not take a short-term deal and pay that £100 more towards your mortgage, right? So if you do that, your balances keep coming down. You can easily bring down your term because, your balances are now reducing. So that's why there's some advantages using the short-term deals. But also with the short-term deals, and if you're overpaying, basically what happens is your loan to values get better as you go. So maybe next time you'll qualify for a better product because you're now overpaying, right? But with the longer-term deal, you'll be paying more interest than the capital. After 2 years, a 2-year product generally has a lesser balance than a 5-year product because you're paying more interest on the 5-year product. So a lot of people miss out on this point, right? So that's why I think it's a good tool. Generally, I suggest shorter term deals. There are circumstances in which, the longer term deals may work out. but it's something you want to get advice on. But for this purpose, I think short-term deals work much better.
Thanks, Sifty. Number 8, pay your mortgage in advance and not in arrears.
Oh, yeah. I think that those are easy things that you can do. Not all banks give you this option, but some banks ask you, when do you want to pay your mortgage, right? So if you pay the mortgage at the end of the month, interest gets accrued for 30 days, right? Some might argue, it's not much, but it all adds up. So if you pay it at the beginning of the month, what happens is, obviously you paid off your mortgage, right? So every month you keep paying less interest, right? So when that happens, you save money, right? So that helps you, every few pounds you save helps you settle your mortgage faster, right? So these are tricks you can use, especially in 2022, to try and reduce your mortgage and, pay it off faster, right? If you are currently on a deal with a bank, sometimes it's probably worth even having a conversation with the bank and seeing whether you can bring it forward rather than paying it later. So it's a worthwhile conversation that you can have with the bank as well if you are currently having a mortgage.
Great. And number 9, we've got avoid capital raising further advances where possible.
Yeah, some people have this bad habit, right? Whenever their mortgage is due, they think, oh, I've paid some money, let me take that out now, right? So they have that habit, right? So they come up with some reason to take it out, right? So it's probably not a good habit if you're trying to settle your mortgage, right? Because some of these decisions you take now may not impact you now. It'll impact you later when you're older. Just imagine you have to pay a massive mortgage when you're older, right? So it's not great because you can't cut down on your hours or anything like that, irrespective of you getting older. Because when you're closer to retirement, you might want to take things a little easy. So think of it long term, right? Don't raise capital as much as possible. I mean, sometimes there are very, very good reasons why you want to do that. But for most people, sometimes they just end up wasting that money, right? So don't do that as much as possible if you want to pay off your mortgage faster.
Okay, number 10, stop paying broker fees. Yes, guys, you don't need to.
There are a lot of free brokers out there. I do agree with why brokers charge fees. Fair enough, they are giving advice, right? But there are some brokers who actually do give advice and don't charge fees as well, right? A lot of people say I paid £900 towards the broker, £700 towards the broker.
Every 2 years, if you're doing that really adds up, doesn't it?
That's right. Yeah. So if you have, say, 15 mortgages, like, mortgage plus 3 mortgages, even if you say sort of £500, that's £7,500 over the years, right? So that money maybe you can put towards your mortgage, right? And pay your mortgage off earlier, right? Because like I said, there are a lot of good brokers out there who won't charge fees, right? I know the majority do charge fees, but there are a lot of good brokers who don't charge fees.
There are. And, at the end of the day, we all have access to the same deals. So, Number 11, use bonuses wisely.
Okay, so bonus for me is a bonus, right? It's something you were not really expecting, right? Or something you got which is outside your day-to-day income and expense, right? So use it wisely. Settle off your mortgage if you can, right? Because that'll only sort of help you reduce your term. As much as possible, pay off the mortgage. Why do you want to pay interest to the bank, right? That's my argument, right? Because it may be 1.5%, but all these 1.5% over 25 years or 30 years does add up, right? So it is your money that you're paying, and interest money is generally lost. Obviously, it helps you buy the house, but it's lost money, right? It goes to the bank. So you might as well reduce that, pay off whatever you can using your bonuses. Like I mentioned earlier, there's a 10% allowance anyway, right? So this is probably a good thing to make use of.
Great. Thanks, Sifty. Number 12, don't add product fees to the loan. Because, guys, you don't want to pay interest on it, right?
Yeah, definitely not, right? Again, it's like the broker fees, right? So if obviously product fees are very common, so very likely most people do pay a product fee, right? So if you have, say, 15 mortgages over a period of 30 years, and let's say you have 999, call it £1,000, it's £15,000, right? So if you just keep on adding it to your mortgage, you got interest to pay on 15,000 and you got 15,000 to pay more, right, at the end. So if you can afford it, just pay off your mortgage product fees, right? So then you don't have to worry about collecting some money somewhere else later to settle that as well, right? So it all helps settle your mortgage faster.
Number 13, change your mortgage payment in line with your income. That's an important one.
Oh, yes. I think that's quite useful because I think, again, it's a lifestyle question, right? Quite often people, I hear, and obviously I also know as well, if your income increases, your lifestyle generally falls in line with that, right? So, suddenly if you're renting a car for £100 and your income increases, you say, oh, I can go and get a car for 150 now, right? So that's what a lot of people think, but think of it wisely because you're used to that lifestyle, right? So if your income increases by, say, 10% for argument's sake, why not use that additional amount to settle your mortgage as much as possible, right? Even if you use 5% of that, it will help you settle your mortgage faster. Because quite often people come to me and say, oh, I've got 22 years left in a mortgage. Let's just get another 22 years left because I'm happy to pay the mortgage when I'm 70, right? So you probably want to avoid that situation. So make use of it because, that will help you settle your mortgage soon.
Definitely. Okay, number 14. Don't reduce your monthly payments.
Yes. Now, at the moment, a lot of the time what happens is, let's say you had a 10% deposit or a 90% LTV, we call it. After, say, 2 years, quite often you fall into a different bracket at, say, 85%, right, or 15% deposit. Now, with the 15% deposit, you have access to better rates often, right? It's not always the case, but most of the time you do, right? So what people do is they say, oh, right, okay, my mortgage payment has come down now, right? So from £1,000, it's now gone to £950, and they're very happy about it, right? My argument is don't do that. You're so used to paying £1,000. Why don't you continue to do that, right? So that potentially can reduce, say, 1 year from your mortgage. If it does, you're paying your mortgage faster, right? So that's kind of the objective, right? So I think that might be useful. These are small sort of tips that we generally give to our clients, and I think which most people are effectively using, right? So hopefully you all can make use of that as well.
Yeah. Thanks, Ifti. Number 15, mortgage tracking tools.
Okay, so there are mortgage tracking tools out there which will track your mortgage to see whether you're on the best deal, right? Because sometimes you might be on a product which you're paying 3% interest, but the market rates might be 2% or 1.5% interest, let's say. Sorry, I'm probably using a little bit of extreme example, but it might be an idea to break that 3% product and move, right? So these tools will help you identify products which are more worthwhile doing. Not always, it doesn't work always, right? But there are instances in which it works, right? So if you don't have access to that, talk to brokers, because sometimes brokers know how to do these calculations as well, right? Even if they don't have tools. So using these tools, you can see how to sort of settle your mortgage sooner, right? Because obviously you don't want to pay extra interest when there's better deals out there, right? So it's always best to sort of look at these tools. Or if not, please seek professional advice, because a good broker should be able to work this out for you to see whether you're always on the best deal.
Yes, definitely. Okay, 16, push for an annual review. This is really a good one.
Yeah, it is. Yeah, I think it's always a good idea. Like, I said at the beginning, take your bank statements and have a look at your expenses. Look at how well your mortgage is doing, right? Sit down with the broker and see what you're going to do. If you're on a 2-year deal and you've just taken it a year ago, you're likely to have to remortgage at the end of this year, right? So maybe you can plan. The brokers can give you advice saying, okay, you're currently on, say, 85%, and if you drop down to 80% loan to value or 20% deposit, you will have a better deal, right? So maybe you can plan it accordingly, right? So maybe you can overpay, say, £200 a month and get to that target. So those kind of conversations, it's probably best to have earlier rather than later, because otherwise quite often people come 3 months before their deal finishes and they say, oh, let's get a deal now, right? And we tell clients, okay, if you can put another £5,000 down, you can get a better deal. But at that time, they don't have the money. But if you plan that a year ahead, right, you probably have to put aside maybe £400 a month. Some people can afford it. Not everybody will be able to. But you're closer, right? So you're not rushing last minute to find £5,000 from somewhere, right? So it could help, right? So that's just an example. There are a lot of other things that we do which clients find very useful. So like I said, call for one of those, right? I know we, for sure, if somebody wants a review, we definitely offer one.
Yeah, we do. We do indeed. All right, number 17. Borrow it from a cheaper mortgage and move to an expensive mortgage.
Right. So I think this is not for everyone. It's for people who have 2 mortgages. Maybe a buy-to-let and a residential, or 2 residential properties. But often I find, they pay 2% interest in one place and say 1.25% in the other place, right? Sometimes which doesn't make sense to me, right? Because maybe you can lower that 2.5% interest to a slightly better deal by moving some money from that 1.25% deal, right? The important thing is to find the right equilibrium, right? At which point it works best, right? So if we can work it out, again, a good advisor should be able to give you guidance on this, right? It might work best for you, right? Because otherwise you might just unnecessarily pay interest in one place, but whereas in my view, the bank benefits on the other mortgage sort of thing, right? So you might as well make use of that.
Yeah, definitely. It's worth speaking to an advisor. And I don't know if everybody knows this, but here at WS, we also are an accountancy and mortgage advisors, and we also have a wealth side. So we can cater for all your needs here. Number 18, avoid interest-only mortgages.
Oh, yes. Please, for residential especially, avoid interest-only mortgages as much as possible. Because remember, you got to settle this mortgage at the end. Generally, the objective of residential mortgages is that you will be living after you retire in that same property. So at that point, you don't want to be in a situation where you have to bring money from somewhere else to settle that mortgage. Often people tell me, oh, no, I got 2 buy-to-let properties, I can sell them, and get that money and settle the mortgage off. Not a problem, so let's do interest only. Yes, the banks will allow you, but then if you sell the 2 buy-to-let properties, you might not really have income there because you retired, right? And, you had a mortgage to pay. But now you might be able to settle the mortgage, right? So try and avoid that as much as possible. I think we've done a few videos on interest-only mortgages. Probably want to have a look at that before you make a call on that. But if you have any intention of settling your mortgage fast, interest only is not your solution, right? So please avoid that as much as you can.
Definitely. Thank you, Ifti, again for some great advice. I hope that helps everybody watching today on how to settle your mortgage faster. I just wanted to put a reminder out there that these points may or may not be applicable to everybody, so please do check with an advisor if they're suitable for you. And if you don't have an advisor, I will leave our WS contact details below, as we are always more than happy to help. Another reminder that as a mortgage is secured against your home or property, it may be repossessed if you do not keep up with the mortgage repayments. Thank you again for joining us again today. We'll be back next week with another episode of Let's Talk Money and Mortgages. Have a great day, stay safe, and we'll see you again soon.